The landscape for opportunities has really polarised a little bit. I think there are really good opportunities out there, but we're seeing some areas rewarded quite quickly, like technology, and some areas have really been out of favour for quite a long period of time. And those areas like emerging markets, in particular over the last decade, have struggled as an asset class. But when we look at economies like Indonesia or India, we think the evolution of the consumer and what stage of their development they're at is really quite interesting. India in particular moving much more with the implementation in 2014 of a shift towards cashless payments, and they're almost at the full penetration of banking and bank accounts now, and that allows a platform for the penetration of consumer credit to a deeper level, and an evolution of consumption away from just that basic staple type demand into more aspirational goods, and that probably creates some opportunities, albeit valuations are sometimes at a bit of a premium for that. So yeah, it's become polarised, but I think there are very interesting opportunities potentially emerging in those emerging markets. Yeah. I think there's two primary areas where we see value in the energy transition supply chain. Number one is in the theme of electrification. And we're very, very bullish on the adoption of electric vehicles. There's a lot of competition, a lot of new models entering the market. Prices are coming down, consumers want the product. But we've a shortage of charging infrastructure, and our grid itself is struggling to cope, even with the relatively small number of vehicles which are electric today. We've got something like 270 million cars in the car park in the US, similar in Europe, and something again similar in Asia. To electrify all of that, the charging infrastructure and the investment in the power grid that we need is absolutely enormous. So companies like Schneider, companies like Amphenol, they're likely to benefit from that transition and that spending on the grid, and not to mention the fact that AI really increases power consumption in the data centre enormously, which puts more strain on the grid. We think that theme of electrification is, pardon the pun, very powerful. Additional area that we think is attractive is in engineering and construction. The paradox of energy transition is really that to get the duplicate infrastructure to electrify our entire automotive fleet or to move to a sustainable low emission power grid and power generation system, we need a lot of infrastructure, and that infrastructure to build it means that we need energy. And there's a limited number of new fields for exploration and development that are being authorised, so we need to make more of the reserves that we have today. So there's a bull market running in energy services like Schlumberger or ChampionX or even Worley and companies like KBR. And they have a bull market in their traditional energy services business, which is really being overlooked slightly because people don't want to admit that that's the fact of that energy transition. But on top of that, businesses like KBR and Worley, who have engineering and construction arms to their business, and sustainable projects and the consulting on new infrastructure projects around that, they really have an excellent long-term opportunity to capitalise on what we think is a structural shortage in engineering talent and pricing power related to these new projects and that energy transition in particular. We see the consumer travel boom which we've had. Spending on travel in the US is now 30% above where it was in 2019. Europe's something around 10% higher than it was at that point. So it's likely from here, as economies weaken a little bit, that might ease into 2024, and we might see more difficult comparisons. The offset to that, we think, and we're quite optimistic about, is the return of the Asian traveller. The Chinese traveller, yes, the Chinese economy has been slow to recover, but there's also been supply side constraints on that traveller getting back out and about, getting visas. It's only just recently been approved by the Chinese government for larger groups to travel to places like Korea and Japan, which is really a favourite destination for many of these travellers. And we think they'll come back into the market in 2024, and that will support overall travel activity and really helping companies like Samsonite, companies like Amadeus and Booking Holdings as well. I think there's a danger that we're increasing financial leverage in the system, and this may be something that's emerged from the bailouts of the regional banks in the US who were funding private equity, but they're also lending in the commercial real estate. And as they've been recapitalised by the money centre banks, the money centre banks aren't re-extending that finance into the real economy via mortgages or the commercial real estate market because it's in a very difficult cycle now, but they're actually extending that credit into the financial sector through repos into hedge funds, and some of that liquidity is coming back into markets and allowing equities to rise and surge in all the way that we've seen so far. So the unintended consequence of that credit crunch may be that it's expanding the addressable liquidity for equities, and that's pushing us higher in a slightly unsustainable way. So there's a danger that if that music stops, then we could be in for an interesting ride.